Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Well, there doesn't seem to be anything scary about the top picks on this 2016 Halloween edition of our Top Pick segment. Brian Boland, Brian Hamilton here to talk with us about their top picks respectively. Brian Hamilton, I'm going to start with you down at the far end. Shouldn't waste any time talking about this company, should we?
No. Castillo Waste is my company. They announce earnings.
Pun intended.
Right.
Of course. They announce earnings Thursday after the close. Now, there shouldn't be any big shock because the company has already increased Q3 guidance twice in the last 3 months, and this is because of increasing revenues, increasing operating income, and most importantly, their cost efficiency. Now, what important thing we want to listen to on Thursday's announcement is how this cost efficiency is going to impact Q4 and 2017. But most importantly is the impact of Hurricane Matthew, because it did billions of dollars up and down the eastern seaboard, and that's where they have most of their operations. And given these positive momentum, that estimates have been increasing, obviously, because of the guidance. And now if we take a look at their estimates trend here, as you can see, 60 days ago, it bumped from the last increase in guidance, and then 30 days ago, we saw another bump. So this is the importance of the Q4 guidance coming forward here. Now, this has also shown a huge improvement, as we can see here, through 2016. This is just skyrocketing prices here, and the estimates are going up. Now, the stock is still around $11, so it's very cheap. That's why it's got a great value score of a B, a growth score of an A, obviously, because of the huge run-up in the price, and an overall VGM score of an A. Now, Brian used to have Casella in his stocks under 10. Obviously, it's above 10 now, but I believe you jumped in around $5.50, $6 mark, and got a really nice gain out of it for your portfolio as well.
Yeah, it worked out pretty good, and I would think that the earnings announcement will also carry the weight of all that Cubs gear that's going to be thrown in the garbage. So we would look for even more success for them going forward.
It would be waste at that point, wouldn't it?
Right, exactly. I mean,
All
throw
right.
that Cubs gear out.
Talk to us about Facebook.
Facebook is my pick for the stock, top stock picks of the week. It's going to have earnings this week. And I think
November 2nd.
Right, and I think we're going to have a good report. But, the important thing that I wanted to bring up about Facebook here is that it is a Zacks rank number 4. It is a sell rank.
I noticed that.
But I wanted to go into why it is that way and, what this also means for the rest of the broader market. So if we take a look at the screen, we get to see that we have that Zacks rank number 4 sell, but it still has that A in growth and F in value. I like to see that divergence because it tells me that growth investors are looking at it, and value investors definitely are not, and I'm more about growth, so when I see that divergence, I really get excited. The detailed estimates really will tell the reason as to why this is a Zacks rank number 4 sell, and we can see that there was one negative earnings estimate revision for 2017 in the last 30 and in the last 60 days, but when we look at that number, the consensus number, we have see that it's 424 straight up from 90 days ago all the way to the current amount. So what we have had is one estimate, shrinking, possibly, not even enough to move the consensus. So a non-meaningful, basically, earnings downward revision, that makes it a 4 strong sell, or just sell. What does that say then about all of the other stocks that the Zacks rank looks at? It's obvious that they're all getting estimate increases, so this is a good signal for the broader market. When a powerhouse like Facebook has one estimate that moves, it to a 4, no real move on the consensus number, everybody else is seeing their estimates move higher. I think that's a great sign for the markets.
Well, on the flip side with Facebook, you can't discount the fact that they've had consecutive positive earnings surprises over the last 4 quarters.
Right. You take a look back at the screen here. We can see the reported earnings history here, the surprise. We can see some pretty big surprises. Going back, about a year ago, we had about a 3% surprise. But since then, it's been 18, 29, 22%. Those are some big positive surprises. We also saw Google report, pretty much in the similar, online advertising space. Very big numbers here, and video was driving it. We've seen their competitor, Twitter, say that they're going to shutter Vine, which is a video product. So, Facebook is also advertising its video product lately. So, if we look forward as to what's going to be coming down the road, I think Facebook's in a good position.
So what do you call it? You call it a media company? You call it a technology company? What is it?
I call it a stock. And
Okay.
I say it's a stock worth investing in.
All right. I guess the other classifications don't matter to you,
Right,
Mr.
not
Boland.
at all.
Thanks for that. Do you own either of your stocks?
No.
I do not.
Okay, well, thanks for that. And don't forget, you can read more about these two companies and others on our website, Zacks.com. So if you're not there watching this video, get on over to the homepage because there is where you can link to all the information. With the Bryans, I'm Terry Ruffalo.